For better or for worse, the internet has fundamentally changed life as we know it. It has provided us with access to infinite amount of information, whether true or false, and it has also somehow simultaneously connected the world on a never before seen level, while also seemingly make us feel more divided than ever. It brought in a new wave of industries, like e-commerce, data, and streaming, and also created more opportunities than ever before to allow people to start their own business, and has given us the opportunity to work our jobs remotely from anywhere in the world. It's hard to imagine a world now without the internet, seeing as it is heavily ingrained in almost every aspect of our lives, and with talk of the metaverse, brain chips, augmented reality, and artificial intelligence, it doesn't really seem like it's going anywhere. And what might be the craziest thing about the internet is how in the grand scheme of things, it's still relatively new. But when it was extremely new, and I'm talking about the first few years of its inception, it created one of the largest financial bubbles of all time, one that eventually burst. It was such an aggressive burst, in fact, that one billionaire, Masayoshi Son, had the world's largest single-day loss of wealth in human history when he lost $78 billion in one single day. This record of wealth loss was never topped until 2022, when a cryptocurrency tycoon lost $87 billion in personal wealth. Which got me interested in the similarities between the crypto bubble of the early 2020s and the dot-com bubble of the late 1990s, the similarities and differences they share, and some of the lessons that we can learn when history starts to repeat itself. So, this is the crypto bubble versus the dot-com bubble. In the late 1990s, the world was consumed with this utopian promise of the internet. It was often described as a new information superhighway that had a heavy emphasis on people quite literally surfing it. The technology was relatively new at the time, and the internet only had 16 million users in 1995. 5 years later, when the bubble burst in the year 2000, the internet had over 360 million users, and it crossed the 1 billion user threshold in 2005. Right now, in 2022, it's assumed that over 6 billion of the 8 billion people living on this planet have access to the internet. Which is kind of funny looking back, because that was the idea that was promised to investors in the late 90s, that one day in the near future, the internet would revolutionize the world and almost everyone would have access to it. And it was because of this idea that the Nasdaq grew by over 500% between 1995 and 2000, almost completely fueled by investments into internet-based companies. This was the dot-com or internet bubble, which grew out of a combination of speculative or fad-based investing, a large abundance of venture capital, and what we now call FOMO investing, when people were throwing money into projects or stocks without any due diligence or research because they were scared they were going to miss out on a get-rich-quick opportunity. There were many stories published involving everyday investors who ended up getting extremely rich from what was essentially a gamble, which caused investors to overlook traditional fundamentals and go all in, which is starting to sound a little bit familiar. With all of this influx in money, these startups abandoned any form of fiscal responsibility and were burning through cash to market themselves to new investors. It was a time of cheap money, easy capital, market overconfidence, and pure speculation. During that time, there was a lot of media coverage surrounding the internet that was kind of like this, look at this cool new technology that is going to change the world. But on the other side of the coin, there was a lot of coverage calling the internet a Ponzi scheme, with a lot of people saying that it would never gain mainstream adoption. Because there was a time when many people weren't using the internet, and most of them didn't want to, mostly because they thought it was useless. It was even published in newspapers, internet might be a passing fad as millions give up on it. But just a few years later, whichever way you looked at it, it was undeniable that the gold rush mentality was on. A gold rush that was even mocked by the San Francisco Magazine, where they released their Greed issue that featured the headline, "Have you made your million yet?" But what goes up must come down, and when the bubble burst, it burst hard. All of these internet-based startups who had received massive amounts of investor capital didn't really know what to do with it, and they weren't allocating it properly. Some had no proprietary technology, some went public with no working product, and some spent over 90% on their marketing without having any form of business plan. And eventually the money dried up, and one by one these companies that were valued at over hundreds of millions of dollars began to collapse. As they fell, investors went into panic mode and started selling off their shares at major losses, causing the entire market to crash, with reported losses over $1.7 trillion. And one of the major lessons of the dot-com bubble was that disruption takes time, and many of the startups didn't have the capital necessary to invest for the long run. And while the $1.7 trillion in capital that evaporated still worries investors to this day, it's important to look at some of the dot-com survivors. Because in a bubble like this, while hundreds will die, the winner will take all. Google was one of the dot-com survivors, and today they're worth $1.7 trillion. Which is exactly what the entire market lost in 2000. Other survivors include Apple, who is now worth nearly $3 trillion, Microsoft worth $2.3 trillion, and Amazon worth 1.5 trillion. These companies truly did change the way the world does business, even though many of their stocks declined in value by 50 to 75% during the popping of the dot-com bubble. Which brings us to cryptocurrency. Everyone knows what the internet is. In fact, if you're watching this video right now, you're using the internet to do so. Not everyone knows what cryptocurrency is, or what it really is, because all they've seen is the Ponzi scheme media coverage, stories of Elon Musk and Dogecoin, and YouTube thumbnails that look like this. A cryptocurrency is a form of digital currency that's based on blockchain technology, which allows it to be completely decentralized, inflation-proof, and every transaction is verifiable. Compared to something like the US dollar that relies on a central authority to manage and maintain its value, cryptocurrency lowers the cost of transactions, increases the speed, has changed what we view to be the limitations of financial services, and there's no government involved in the transfer of personal capital. Similarly to the dot-com bubble, the crypto bubble is filled with thousands of different players. While dot-coms struggle to disrupt the retail industry before running out of cash, many cryptocurrencies will cease trading and lose most of their value when the community realizes they have no business model, no developer community, and little to no use case to disrupt a traditional industry. And in 20 years from now, 99.9% of these cryptocurrencies will most likely cease to exist, and there will be a lot of investors who lost everything that they put into the crypto market. But I am of the belief that just like the internet, one day everyone will be using some form of cryptocurrency in one form or another, at least the blockchain technology behind it. And there's still a massive window of opportunity if you play your cards correctly. Right now, about 106 million people currently hold various cryptocurrencies globally, which is almost exactly the same amount of users that were on the internet in 1998. There's a huge rise in cryptocurrency in developing nations, specifically in Africa, where nearly 65% of adults remain unbanked. On top of that, Nigeria, Kenya, and South Africa are all in the top 10 countries for crypto use globally, and Nigeria is projected to be the second largest country in terms of population by 2100. India, who's projected to be the largest country in terms of population by 2100, is also currently in the crypto use top 10 list, with nearly 8% of their population currently holding some form of digital asset. Billionaire Shark Tank investor Mark Cuban seems to agree, stating that he sees cryptocurrency exactly like the dot-com bubble, and that certain cryptocurrencies are analogs to those dot-com stocks like Amazon and eBay that survived the bubble and thrived. He continued on and said that along the way, many fortunes would be made and lost, and we'll find out who has the stomach to hodl and then who don't. I will say also that some people do disagree with his analogy, like Tyler Winklevoss, who's the founder of Gemini cryptocurrency, and the guy who Mark Zuckerberg stole the idea of Facebook from, said that Mark's statement was wrong. Cryptos like Bitcoin and Ethereum are networks. They are definitely not stocks or shares of a company. They're like owning a piece of the early internet. Comparing them to stocks is an apples to oranges comparison. So even though you can't make direct comparisons between a share of a company and holding cryptocurrencies, there are still quite a few similarities, with a lot of people wondering if Elon Musk's favorite meme coin, Dogecoin, is just a modern day pets.com. If you aren't familiar with Pets.com, it was an e-commerce pet toy retailer that raised over $80 million and filed for bankruptcy in just the span of 9 months. Just like dot-coms were going to disrupt and bankrupt brick-and-mortar retailers, we hear predictions today that cryptocurrencies, digital assets, and decentralized finance projects are going to disrupt traditional financial infrastructure firms such as payment processors, banks, brokerage firms, and securities exchanges. And what might be the ultimate argument for the success of cryptocurrencies is the number of countries who are currently developing central bank digital currencies. These currencies are almost certainly coming to your country in the next few years, and they are based on exactly the same technology as crypto, except the only difference is they're not decentralized and they will be controlled by your country's government. And whether that's a good thing or a bad thing is up for you to decide, but it makes a very strong case for the underlying blockchain technology. You also have something like NFT technology, that right now gets blasted as a pretty pointless thing for cartoon drawing of apes, but has the potential to completely change a number of industries, specifically when it comes to counterfeit items, from designer clothes, watches, concert tickets, or merchandise, because each item's authenticity can be traced back to the original seller, who can then also place a cap on the resale value to prevent price gouging. And before you decide whether you believe in it or not, I would encourage you to research the technology beneath the cryptocurrencies instead of getting hung up on the negative media coverage. Once you understand the technology, and then look at where the world is headed with things like augmented reality, the metaverse, central bank digital currencies, play-to-earn gaming, and Web3, you'll start to see a recurring theme and a problem that cryptocurrency could solve. Personally, I do think that cryptocurrencies, smart contracts, and digital tokens will disrupt the financial institutions of today, but I don't think it's going to replace the entire global financial system. And as a reminder, it took the dot-com companies 22 years and a global pandemic to take a 20% market share of retail sales. And to clarify, this video is not to encourage or convince you to invest in any form of cryptocurrency. I myself have probably lost more than I've made in the crypto market, but I was interested in the parallels between this bubble and the internet bubble, because I do think there are lessons to be learned from our past as we move into the future. If this topic is something you're interested in learning more about or talking about, let me know in the comments and maybe I'll make a video on all the different ways we could implement cryptocurrency into our lives in the future. Until then, if you enjoyed this video, I'd really appreciate if you click the thumbs up. Thank you.